Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And sometimes in this webcast series, we get into new technical tools like oscillators and indicators, but today we're actually going to be using an entirely different type of chart. Instead of using traditional candles, we're going to be learning about building a trading system using something known as Heikin-Ashi candlesticks. Whenever I bring up this topic, it's always interesting to me to know who in my audience has heard of Heikin-Ashis, who understands them. I'm going to go ahead at a pace that everybody can follow. I'll explain how these things are built. Then we'll build an example trading system using Heikin-Ashis, and we'll make sure that we place a trade. A lot to cover before we get to any of that, though. Let me first of all say hello to everybody who's chatting in out there on YouTube. Hello there, Marion, Stephen, Janelle, Jay Richardson, Will, everybody else. Frank, great to see everybody. I see lots and lots of people chatting in. Always great to see the familiar names. I also see there are a couple of you who have already self-identified as being new to this webcast series. So hello there, Chris, and everybody else. If you are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy the recording, but be aware that you're invited to join us in the live discussion. This is a Friday webcast series, and we do this live every Friday at 2 Eastern time. We'd love to have you here in the live stream audience. And as a special treat here for my live stream audience members, my very good friend, a longtime peer, Scott Thompson, is going to be hanging out in the chats with us. He's going to be addressing any questions that I can't get to just during the flow of the presentation. Thanks for having my back there, Scott. And I'd also like to issue an invitation to everybody listening. If you have an account on X, you should be following your favorite Schwab presenters there on X. Best place to connect with me in between the live streams when the camera is off is to go over to X. Okay, so you can find me on X at Cameron May CS, but let's go right to this discussion. And as we do, of course, we need to consider the risks associated with trading and investing. These disclosures are important, so keep them top of mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so let's set an agenda for what we're going to be spending our time together today accomplishing. So this video is part of an ongoing series of webcasts, and we place trades and we follow up on those trades from one video to the next. So first thing that we're going to do is go take a look at our example paper money trades that are already in place. We have 3 of them. So we'll get a quick update on those. We'll revisit why we placed those trades, see if anything needs to be done with the management. Then we want to see what's going on with the S&P 500. I swear I'll rip that Band-Aid off quickly because I know what's been happening over the last couple of hours. I'm sorry. For some reason, the executive office in China don't consult with me first before taking serious action. So it's not a great way to set up my discussion of charting sometimes. Anyway, we're going to take a look at the S&P 500. Then we're going to plan a new trade system using something known as Heikin-Ashi candles. So I'll show you how those candles are built. They're quite different from traditional candles. And then we're going to combine those with a second technical approach into an example trade system and plan and place an example trade using that system. All right, so let's go to the Thinkorswim desktop trading software platform. Here are our 3 current positions. So we have Boeing, we have BR, we have SMCI. Let's see what's going on with Boeing. We bought 25 shares. Was this last week's trade? Let's see. Nope, that was a couple of weeks ago. All right. But this trade down at $276 at the moment. Let's go see what the technical logic of this trade was. So this was built on what's known as the Chandi momentum oscillator. And the entry was when we saw that oscillator dip down into what's traditionally considered to be an oversold condition, then start to rise back up from that low. So we got down below minus 50, started to rise back up, took an entry here. That looked like that was coming off some recent price lows, and we were hoping to see prices start to climb on the signal from that Chandi oscillator. Sometimes technical indicators provide some additional value. Sometimes, nope, doesn't work out. Our plan here is to exit if that Chandi oscillator gets up and above our 0 line, which it's still working to do. But yeah, here's what's been happening just over the last 48 hours. Boeing's had a mind of its own, as stocks tend to do. They don't care about the hard work that we put in. Sometimes they have a different priority. In this case, yep, it's been pulling back. Now, we do have a stop just down below those recent lows. So if it's uncooperative enough, even if we don't get that crossover on the oscillator, this trade will be over. So there's our stop. So we haven't hit our target yet. We haven't hit our stop. We're going to let that one continue to work, but it's not off to the best of starts. Next up, we have BR. So this one, pretty much break even. This was last week's trade. So this one was on an oscillator that really doesn't get a lot of press coverage out there. Let me bring up our study set. I'm going to load up our BR stochastic distance oscillator. I haven't found any other YouTube videos about this indicator outside of just the ones that have been provided by Schwab Education. So if you want to learn about this indicator, you got to do it here. All right. But in any case, another oscillator quite similar to the Chandi momentum oscillator, but with the stochastic distance oscillator, again, looking for a dip below the oversold range, in this case, minus 40. But we've combined that with a longer term trend indicator. As long as that is still trending higher, the interpretation by a trader using this system would be still looking for bullish entries. This would be a typical bullish entry where our stochastic distance oscillator gets into that oversold and starts to rise again. It doesn't need to cross back up above the minus 40, just needs to start rising again. That happened here, started to rise, pulled back a little bit. We took an entry last week. We're pretty much in the same position. We have a target in place at previous highs for this trade. We have a stop just below previous lows. So we'll see which of those ultimately plays out. But for now, we're going to leave that one working. JD says, is there oscillator study I can put in my column watch list? Number of different studies that can be placed where you can see the numerical values there, JD. I'm not going to be demonstrating that today, but conceptually, yeah, it can be done. All right. But let's go. Let's have a look at SMCI. So this trade has actually been doing quite well. We're up a pretty substantial percentage on this one. This was our SMCI market forecast trade. The market forecast tool is a tool that that a trader can only find on Thinkorswim. This is a proprietary tool using a combination of three stochastic oscillators. And typically here, the trader is looking for all three of those oscillators to get down below 20 at the same time. That's known as a bullish cluster. And it doesn't happen very often. As a matter of fact, for SMCI, we've only seen 5 such events over the course of the last 12 months. The first 3 did a pretty good job of prefacing a strong move to the upside. So we saw one here, one here, one here. What we definitely noticed, though, is it doesn't come right at the bottom. I'd love to find an indicator that just nails the bottom every time. But yeah, with each one of these, there was a little bit of a premature signal here. So we allowed for that. Wiley says, are we teaching on Ichimoku Cloud? Not today. Today's Heikin Ashi candlesticks, right? But we allowed for a little bit of a timing issue with placing a stop initially down below these previous lows back here. Now, you might be saying, well, wait a minute. Okay, Greg says, let me know when you find that indicator. Yeah, the indicator that calls the precise bottom every time, Greg, I like to say, I'll let you know just before my retirement party. Okay, because I think that would be shortly following. Anyway, we had a stop down below these lows, but we've moved that up. Last week, we nudged that stop up just below this broken resistance here. Maybe on anticipation, this could be a new support. Should we move that up today? What do you think? So far, our stock has been doing well. Ooh, look at this. Oh my goodness. We were really killing it on this one. Today, getting killed. Yep, this is probably that tug of war right now. China just announced that they were imposing sort of stricter control on exports. And the executive office has responded with a suggestion that there may be massive tariffs, new tariffs on China. Shareholders don't seem to be taking that news in the best humor. And here's what we get as a result. So yeah, this one's sagging back. So it might fall all the way back. If it does, comes down to our stop, we'd make a little bit of money. I was already considering moving this stop up, but we need to find a new level to which we might want to move that stop. And typically a trader might look for, well, are there any obvious support areas or resistance areas above the most recent one? So in this case, looks like we might be able to make a technical case, not a terribly strong one. Going to admit that. Some highs right through here, kind of coinciding with these lows today and a few days ago. Is there a possible support right there? Just about where we are right now. If we move that stop up, if we keep consistent with where we've been placing it, just a couple of 3 percentage points below those lows, this trade could be over pretty quickly, but it also could preserve additional profits. Should we do it? There are pros and cons to these sorts of decisions. I'm going to be doing it here. Let's say that we move that up. Looks like our lows, that resistance support seems to be right around that 54, 53 and a half level. If we gave it a few percentage points, that would have our stop down around 52, maybe about right here. Not much wiggle room if we put our stop there, but I'm going to do it. So let's click and drag our stop up. Let's put it right up at around 52, as close as we can. There, 51.97, close enough, a few pennies below. This is to move that stop up. There's a little reminder here as we move that stop. With stop orders, there's no guarantee that the execution price, the amount that's received on the triggering of the stop, will be equal to or even near the activation price. In this case, that activation price would be now 51.97, right around 52. So let's send that off. And we just move that stop up. There's not a commission to move a stop. The only commission, if there are commissions charged, in this case, there's not a commission, it's a stock trade. But some types of trades can carry commissions. It's not generated just mere fact of canceling or replacing an order. Okay, so those are our current positions. Let's move on to, let's put on your blinders if you want to, but we're going to take a look at the markets here. Now, before we go to the markets, though, I do want to point out just quickly, let me hit the pause button on the presentation. There's been a survey link that's just been added to the chat window for those that are here in the live stream audience. So if you would do me this favor, click that survey link, then that'll pop up a survey. You can fill it out after the webcast is over and you can give me some honest feedback. I just want to let you know a couple of things about that survey. Number one, it's a really short survey, 2 multiple choice questions, and then a comments box and a suggestion box if you want to go to those extra lengths. But if you take the time to fill out that survey, I just want to let you know, I will take the time to read through that data and read through those comments, and it definitely helps. Some of my webcasts come straight from those survey comments. So thanks for doing that. It's never a wasted effort, okay? But let's go back to the paper money account, and I'm going to have a look at what's going on with the S&P 500. So yeah, we're down about 2%. It's really just about the worst day that we've seen since the rally started. Back on April 7th, we started that rally that carried us up about 40% off those lows. Big move in just a short period of time. Really, our biggest intraday move was this candle back on April 8th. This is the second biggest. This is the biggest one since that date. So it's been 6 months now since we've had a move of this size. That could impact some traders' technical outlook, but I want to bring in, just for the sake of consistency, let's bring in the technical set of studies that we use each week. So I'm going to load up our trend value momentum strategy set, abbreviated to TVM. Now, with each one of these, we've gone through 3 different trading systems on 3 different stocks, and now we're looking at the markets through a combination of 3 different technical studies. I explained each one of these in detail as we took the original trades. If you don't know these, you can go back to our archives on our channel. So do yourselves a favor. If you have not yet subscribed to our Trader Talks channel, do that right now. You can go down, click on the subscribe button. It only takes a second. It doesn't cost anything, but our Trader Talks Schwab Coaching Webcasts channel on YouTube is where we house previous webcasts. Now, of course, you can also join the live streams right here on the channel, But you can go to the playlists of our previous webcasts. They're organized by series. So this is the Advanced Charting Techniques series. And I can just pop down through. And thank you, Scott, for posting the link to this. But I can just scroll down through those available series. Mine's about halfway down toward the bottom. Advanced Charting Techniques. If I click on View Full Playlist, I can look through the previous playlists and learn about things like the Chandi Momentum Oscillator. We discussed the Trend Value Momentum Indicator set right here. And the Stochastic Distance Oscillator was covered in detail in this webcast. So great way to round out your understanding of the technical tools that are available to you on the Thinkorswim desktop platform. But let's look at what's going on with the S&P 500. Maybe try to apply it, some different context from just, panic button, down 2%. What do we do? Well, with a trader who uses the trend value momentum approach to analyzing stocks or even indices, first thing they'll look to is a trend confirmation. And the bottom line here is if our 50-period triangular moving average, it's an intermediate term, smooth moving average, if that's still rising and remaining above the 100-period or the longer-term moving average, that might be a confirmation to those sorts of traders that this charted symbol, in this case the index, still seems to be in an intact bullish trend, even despite the second worst intraday down day that we've had in the last 6 months. Now, there were some technical signs here that maybe something like this could be on the horizon. It's never a guarantee. But one thing that a trader using the value indicator, in this case, we use the RSI for indications of potential short-term value or overvalued situations. Our RSI actually got up into the overvalued range. And the next time it got up there, it didn't reach quite as high a peak. What do we call this when we see the peaks getting lower on our oscillator, but the peaks getting higher on price? This is known as a bearish divergence. Our oscillator is diverging in its behavior from what we're seeing on price, and it may be signaling that there's some weakness in price that's not obvious just by looking at the chart. It doesn't always perfectly project that there's something darker on the horizon, but in this case, at least there are early signs that maybe the trader might want to sort of pump the brakes on new bullish positions, not necessarily just close everything out, but if we were planning to take new trades, maybe hold off on those while things look like they're a little bit top heavy. At the same time, let me zoom in a bit. Our momentum oscillator was really struggling to do much. Even though price was climbing, our momentum oscillator was really hovering right around zero and then actually slipped back below zero yesterday. So we had this bearish divergence on our value and momentum slipping from the bulls having most of the buyers having potentially most of the momentum to now maybe the sellers having the momentum. So there were some potential signs here. Again, just because signs seem evident doesn't mean that we should have known that this was going to happen. It happened, right? But I'm going to use that as sort of our technical backdrop. Not the best of days right now. Our two oscillators not looking the healthiest for the bulls. So with that said, what might a trader do as they go forward with planning and placing their next trade? Well, maybe they just don't. Maybe they wait until things look a little bit stronger. I don't have that luxury. It's Friday. I don't want to just say, well, that's it. We're 18 minutes into this webcast, so we're done. No, I'm going to go ahead with the discussion. But maybe the trader might also just scale the position down. You don't have to do either one of these things, but those are a couple of adaptations that might be taken if they're starting to see some weakness there. Now, guys, I already hit the pause button once on this presentation. I'm going to do it again, though, because this is a really cool thing that just happened. I just saw out of the corner of my eye a chat come in from my great friend, longtime peer, Ben Watson, saying that he's checking in from the Orlando Technical Analysis and Options Strategies Workshop. So hello there, Orlando. Hope you're having a great time with Ben. You already discovered he's a fabulous human being. also knows a ton. He and I have been working together for, Ben, it's been more than 20 years, hasn't it? Teaching people about things like charting. I also want to say hello there, Ray and Scott. Good to see you. In Orlando, I think you even have Rachel stalking around in the back there. So I haven't even met Rachel. She's the newest member of the team. I know who she is. I've talked to her online. Hello there, Rachel. But yeah, I think, let's see, this is day one out there in Orlando. So you must be learning about technical analysis, learning about charting. Well, guess what we're talking about in this webcast right now? This is my Advanced Charting Techniques webcast series. And so we've been taking a look at what's going on with the S&P 500, this tug of war between the executive office and China. What's the longer term context for that? Just through a technical lens. So I want to get back to that. But let me first of all make a recommendation for everybody sitting out there in Orlando. If you didn't know that we had this resource where you can hop online at any time and check out education about things like technical analysis, or you have Saturday tomorrow options trading. We have a whole YouTube channel where we do webcasts all throughout the day, every hour of the trading day. So you can find that. Let me go to that. YouTube channel is known as Trader Talks Schwab Coaching Webcast. So if you have a moment there, you're sitting there, Ben's letting you look at me for a minute. Give us a subscription here. Subscribe to our Trader Talks channel. It doesn't cost anything. So track us down on YouTube, subscribe to Trader Talks, and you can join our live streams right here. You can find the playlists for webcasts like this one, Advanced Charting Techniques, just by clicking on playlists. And I can just work my way down through that playlist. And for example, here's mine, Advanced Charting Techniques. Last week, we learned about something known as the stochastic distance oscillator. All right. Anyway, back to our presentation. Let's go have a look at our new approach that we're going to be discussing today. So I mentioned we're going to be taking a look at a very different type of chart. Lots of traders know about what we call traditional candlesticks. Well, we're going to be learning about something known as a Heikin Ashi candlestick. Totally different construction on these candlesticks. So let's clean up our chart studies here. And how about we do this? Yeah, let me change up our study set. Should we switch over? Let me switch up the symbol here. How about we go to Intel? Here's Intel, and I'm going to remove these studies. Just a nice clean candle chart. Matter of fact, once I've done that, we'll switch back here to the S&P 500. I'm going to take off this little drawing that I made. And this leaves us with a nice, clean, traditional candlestick chart. Well, let me set up sort of a value proposition that some traders see as we switch over to a Heikin Ashi candle. With traditional candles, lots of people like to use traditional candles, but some traders see some potentially inherent shortcomings of traditional candles. Number one is they seem to be very quick to change their implications. So we see traditional candles move from white to red, back and forth, bullish to bearish. That's one problem that a Heikin Ashi candle user might be seeking to solve. Another, all of the gaps that can appear on a chart. Gap up, gap down, gap up, gap down. That's because in the construction of traditional candles, each trading session from 9:30 Eastern until 4 Eastern is traded as sort of as its own individual, unrelated event. Okay, so it just creates its own little candle. Well, Heikin Ashi candles attempt to eliminate that, smooth out the chart, and link one candle to the next. So let's load up Heikin Ashi candles. So go ahead, chat in yes or no. Have you ever used Heikin Ashi candles? Just let me know. So as you chat that in, I'm going to go up here to Style. I'm going to go to our chart type, which is now set to candle, and I'm going to switch this to Heikin Ashi. There we go. Now, what you'll probably immediately see with these candles, first of all, the sequence of white candles tends to be uninterrupted for a longer period of time before switching to red. Secondly, we'll see that red candles tend to be uninterrupted by white candles for a longer period of time. It seems to be smoother in its initial visual presentation than a traditional candle. Another thing you will never see on a Heikin-Ashi candle, never is a strong word, but it's built into the way this is constructed. There are no gaps on Heikin-Ashi candle charts, right? So now, okay, so Tam and Honey says, yeah, you're aware of this, but you like to see the gaps. For some traders, they actually build trade systems around gaps. Well, guess what? Gap trading systems really just can't be applied to Heikin-Ashi candles. All right, so let's talk. Masood making a July 4th reference. You are familiar with the Kobayashi, Takeru Kobayashi candles. Used to be why do I know this? Because I'm a nerd. The world hot dog eating champion in the Nathan's Famous hot dogs that are just broadcast every July 4th. Yeah. And now it's Joey Chestnut. Not that I would know that. Anyway. So let's talk about how these are constructed and how they might be used for trading. And then we're going to introduce another technical technique just to build a trade system. And we're going to trade according to that system. So let's zoom in on some candles. How about we zoom in on these last, I don't know, about a month. There we go. We see a series of white candles. There are some red candles. What you should know, first of all, is they have consistent elements with traditional candles. We have open, high, low, close. Well, that sounds like a normal candle, but the calculation of those, very different. First of all, let's talk about the opening value of a Heikin-Ashi candle, and it's very straightforward. It's just the middle point of the body of the previous Heikin-Ashi candle. So if we look, for example, at today's Heikin-Ashi, you can look that it just bisects yesterday's body right through the middle. And if we look at yesterday's, the open of that candle went right through the middle of the previous day. So that ties one day to the next. There's no gap. We just start at the middle of the body. Okay? Rice Bird, I'm an A+ nerd. Yeah. All right. So that one's pretty simple, the open. What about the close? Well, the close, we just take today's trade activity, take the open, the high, the low, and the close. And instead of, with the traditional candle, the close is just the close. When the closing bell rings, ding, okay, that makes a print on the chart. That's the closing price. And for some reason, we assign value to that as being somehow significant. And some traders take umbrance with that. They disagree with that premise. So instead, the Heikin-Ashi candle takes today's trading activity, the open, the high, the low, and the close, and the average of those four becomes the closing value for the Heikin-Ashi. So it's not just one data point, but four averaged, right? So in this case, what we're looking at is the average of high and low and close is lower than the middle point of yesterday's candle. That's how I would summarize this Heikin-Ashi. So what are the high and the low of a Heikin-Ashi candle? High and the low here is a comparison of two things. First of all, we look at the middle point of yesterday's candle, and we just look to see if today's trading has taken us up through that middle point of yesterday, or in the case of, let's say, we open up above, if it's pushed back down below the middle point of yesterday's candle. So envision this. Middle of yesterday's candle is here, and we get a gap down in trading overnight. So all the trading activity is down below here, all right? And we never quite get up to the middle of yesterday's Heikin-Ashi candle. Well, that just then becomes the high of today's candle. At the same time, it's also the opening price for today's candle. So the high is always just the greater of the midpoint of yesterday's candle or today's high, the highest trading price for the day. So the opposite applies for establishing the low. Let's suppose here's yesterday's middle point and we gap up. And at no point does the stock ever go down below the middle of yesterday's candle. So all the activity's up here. Well, then today's open serves as the low of today's candle. If we push down below yesterday's mid, that becomes the new low. So highs are the higher of the middle point of yesterday's candle or today's trading high. Lows are the lower of the middle of yesterday's trading candle or today's trading low. Okay, that's it. That's how these are built. That's how this smooths out. Doesn't ever have gaps. Hope, did you just go, oh man, I didn't follow that. Do you notice even I'm sweating talking about how that thing's built? So yeah, there's a bit to it. And you might want to go back if you need to go back to the archive and rewatch this and slow it down and sort of process it. It'll make sense to you. It doesn't take too long to grasp onto this, at least in my experience. But even if we don't know exactly how they're built, the trader can still understand how they're conceptually traded. So with Heikin Ashi candles, there are actually typically 5 different types of candles that are identified. Okay, let's talk about the bullish ones first. So we have a bullish candle, which is just a white candle with a little bit of a tail sticking down. We have a strong bullish candle, which is a white candle with no tail. With traditional candles, you almost never get these. With Heikin Ashi candles, you get them all the time. Do you notice this? We're getting a whole series of white candles where there's no wick sticking out the bottom. What is that telling us about the trading activity from one candle to the next? What that literally means is that we're getting sort of upside gaps every day, and we're never going back down below the midpoint of the previous day's candle. That's how that's constructed. So that is just particularly strong trading. So we have bullish candles, which have a bit of a wick here. We have strong bullish candles, and then we start to transition. When we get up to peaks, sometimes we'll see a smaller candle with a tall wick and a wick sticking out the bottom. So wick sticking out the top and out of the bottom. And sometimes we might refer to these as kind of a doji style candle. Well, with Heikin Ashi candles, when we get a small body with a wick and a shadow, a wick and a wick, whatever you want to call it, that's sort of seen as maybe a potential tipping point in the short-term trend. Maybe we're hitting a peak, ready to pull back down to lows. So in this case, we actually got 1 and 2 of those, but then we started to reverse. Okay, here we got one small bodied candle, long. This is actually much more textbook than the other 2 examples. We've actually seen a few of those right through here as well. These are very traditional reversal candles. But in any case, we have bullish, strong bullish, we have reversal, and then we have bearish. I need to zoom back out a little bit. For bearish, there haven't been very many bearish. So here's like a series of bullish. These are actually strong bullish. And then we got kind of a reversal candle here. And then we get bearish. Bearish is when we have a red candle with just a smaller wick sticking out the top. So a longer bearish candle with a small wick sticking out the top. And then we have strong bearish, which are longer red candles with 0 wick sticking out the top. In other words, we're kind of gapping down day to day, particularly bullish or bearish sentiment there. So I think you're already probably starting to guess how this might be traded as a system. And we've been using the S&P 500. I originally brought up Intel. Let's switch over to Intel and talk about how this might be traded. Well, for some traders, they just look for reversals. So they'll look for a bearish move followed by a reversal, and they'll get into a bullish trade and wait for the next reversal candle. So that's one way. Now, others, though, they might combine that with other technical techniques they use. And what some traders have noted is that because there are no gaps, it very commonly will create things that look suspiciously like, look at what's been going on with Intel. This big move up, we have a big move up here, a big move up here, just uninterrupted white candles moving up. If we were looking at traditional candles, what sort of alarm bells might be going off in a technician's head? Hey, this might be a flagpole. Yeah. Fibonacci's are actually quite commonly used in combination with Heikin Ashi candles. So here's one Fibonacci-based Heikin Ashi candle trading system. That let's maybe experiment with this. So just like with the traditional candle, it begins with the identification of a strong move to the upside. Now we could look at that. Sometimes it'll just be one gigantic candle. That's okay, but for some traders, they may require at least a series of candles, something more like this, or like this, or like this, maybe something more like what we've seen twice over the last maybe 3 or 4 weeks. And that is where we get 3, 4, 5 different white candles. So here's maybe one definition of a nice strong upward move, identifying a potential bull flag. And that is, let's say 5 white Heikin Ashi candles in a row. All right, let me zoom in on maybe just this period here. So for example, we saw at least 5 here. We saw at least 5, yep, right there, ending with that one. So those can become potential flagpoles. Then the trader might look for, on the retracement, their reversal candle. So let's bring in our Fibonacci's into this discussion. So when we see a flagpole, sometimes a Fibonacci trader will see a flagpole as a signal to draw in a fib. So I'm going to use my Fibonacci retracement tool, go to the peak of one of these big moves. Now notice there was actually a white candle here, but we're going to go to the tallest one and click at the top and then move down to the bottom of that move. And then here is the example entry signal. When a stock runs up in uninterrupted fashion like this and then starts to pull back, that's a typical assumption of both a Fibonacci trader and a flagpole trader. They're looking for a little bit of profit taking following this period of excitement. And that may reopen a window of opportunity if the stock pulls down far enough. Well, what's far enough? Well, using our fibs with Heikin Ashis can sometimes create flagpoles that might not otherwise be obvious on a traditional candle. And sometimes the sell-off is proportionately a little bit shallower. So here's one way that we might identify that sell-off, and that is for our price to fall back at least below the 78.6% line on our fib, but not more than 50% line. So let's draw a box around that. So here's our 78.6, and then down to the 50. Let me draw in a box there, right there. All right, so here we hit our peak. We pulled down below that 78.6. Once we get down there, then our trader becomes on high alert. Now we're looking for a reversal candle, a doji candle, a small bodied candle with a wick and a shadow. And that becomes a signal for entry. We can either enter on the day of that candle or wait for confirmation the next day. But that's the typical traditional entry on this system. And then when might the trader take profits? Well, as with a typical flagpole signal or a Fibonacci signal, the trader might be waiting for price to get back up to the previous highs. And that actually becomes the minimum standard here. What our trader would be using as a potential target exit here is for price to get up above the 100% retracement and then give a reversal. So in this case, this might be our exit signal right there. So a reversal, here's the bottom line, a reversal Heikin Ashi candle happening between the 78.6 and the 50% fib, following at least a 5 white candle upward march. There's our entry. And then the target becomes waiting for the stock to get up above 100 and then looking for a reversal candle like that. Now, is this a system that's guaranteed to work? No, no system is guaranteed to work. So the trader might want to have a plan for exit. And that, just like with many other Fibonacci approaches, is if the stock continues to behave bearishly when we otherwise would be when we're in a bullish position. And in this case, if we break below that 50% retracement, this may be more than just profit taking, and our technical trader might think that that this is looking more like I don't know, maybe transitioning to panic selling. Magnolia says, will you mark this entry only with Heikin Ashis or in regular candles too? In this case, Magnolia, there is no recruiting of the traditional candles. It's just using the Heikin Ashis. All right, good question. So let's switch this up to something maybe a little bit more current, because this is kind of a recent historical example. I want to look at Merck. What's going on with Merck recently? Well, Merck just had a March higher. 1, 2, 3, 4, 5 candles. So here the trader might think there is a flagpole. Let's go down to the bottom of that first white candle and let's see, using Fibonacci's, have we pulled back to at least the 78.6% line? And in this case, yes, we've gotten below 78.6. Interestingly, just a couple of days ago, our Heikin Ashi candle low touched the 61.8. But what do we have right now as of today? Color is not important. It's just the construction. We have a small bodied candle, long wick, long shadow. That's a reversal candle. There's our entry. Where might a target be? It's not going to be an actual physical, like numerical target. We're looking to get at least above the 100 level, so above $91, and then we'll start looking for a reversal candle. Where might the stop be? That stop is going to be placed down below 50%, not much below, maybe a few pennies below. Let's put our stop in down here at 84. Rather than going for 84.50, which is kind of a round number, let's back off on that. Let's call it 84.48. Okay, so our stop we're going to place just down below this. Not going to be terribly tolerant of the stock misbehaving. There we go. Put our stop right down there. So there is our plan. How about, I'm going to zoom back out again. And I'm going to put one text note on here, right up here. Exit on reversal Heikin Ashi candle above 100%. That's our target. All right, so now we have a plan. Let's go put that plan into practice. So our stop is going to be down there at 84.48. Let's go to our trade tab. Let's buy some shares. Typically, we keep this to about $5,000. 100 shares would be about $8,600. How about we buy about 60 shares? I'm going to right click on the ask price, put in a custom buy order with a stop. Not going to be a target because that's going to be visually confirmed looking at the candle. But let's buy maybe 60 shares here. And let's put our stop at 84.48. Was it 84.48? I have to remind myself sometimes. Yep. Go. And we're going to make that a good till cancel trade. And let's switch this to a market order and confirm and send. So we're going to buy 60 shares of Merck at the market price. Now with market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. So 86.56 is not a guaranteed entry price. And with stop orders, there's no guarantee the execution price will be equal to or near the activation price. So we're not guaranteed that if we get stopped, it'll be exactly 84.48. No commission on this trade, but there can be on some types of trades. Let's send that order off, and we're in at 86.56. Okay. Guys, we have accomplished what I set out to do today. I wanted to talk through these things known as Heikin Ashi candles. I wanted to introduce how they're built. Went through that fairly quickly. You can go back and watch the archive if you want to process that logic a little bit more. But then we wanted to build an example trade system using Heikin Ashis, and we recruited our Fibonacci tool to do that. So we have a plan in place. We'll take profits if they emerge. We have a stop in to hopefully mitigate the losses on a trade if the stock starts to be uncooperative. But we've accomplished what I wanted to do, so time for me to let you go. Go enjoy the rest of the webcast or the rest of the day, but just be aware. Make sure that you have access to the full slate of educational offerings from Schwab. Number one, make sure that you're subscribed to our Trader Talks channel on YouTube. Just click on the subscribe button. This is where you can find the playlists and join the live streams. Also, make sure that you're following us on X. You can find me on X at Cameron May CS. Here's my handle right here, at Cameron May CS. And if you reply to me, I try to reply right back to you. This one, the most recent one, I've been letting it sit for a moment, but I asked my followers, does this really count as a bull flag? Looks like about 19 people have replied. I'm going to go in there this afternoon and have a chat with those 19 people. Best place to connect with me, though, right there. All right, everybody, go have a great weekend. Thanks for all the likes. I can see, 172 people watching. 61 have clicked the thumbs up. That's always appreciated. That's like a pat on the back to your presenter, but also gives a boost to my videos and the YouTube algorithm, helps more people find those videos. So it's helpful to everybody. But I will see you in a future webcast. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.